I have Jason Cartwright from Randstad and also Simon Boulton with me in the studio from Aequalis. Simon and Jason, on that number, what have you guys been seeing the past month? We have in our minds that this jobs market is weakening. Now that's a very surprisingly strong figure, Jason.
It's a good number. It's a pleasant surprise, and I think it demonstrates the underlying strength of the labour market in Australia. But I think also is consistent with exactly what we're seeing every day in Australia, which is a patchy job market. And so for that number to tick up, and as we know, it was expected to remain flat at best. Most commentators were predicting a flat 5.3% number and a 10,000 new job creation. So for the jobs market to appear stronger than that, I think certainly demonstrates an underlying strength of the market, but I think really highlights the two-speed economy and the patchy nature of the job market at the moment. And
Simon, we added around 10,000 part-time jobs, around 10,000 full-time jobs. Yeah. Any impressions from you first up?
I think that again it's a surprise. I think things are being driven at the moment by emotion, and this is another signal. Everyone's expecting it to be doom and gloom, and the reality is it's actually quite good. I think the same thing's happening on the stock market. So there's just this recession we're trying to talk ourselves into, as if it's an inevitable event that's going to happen here. I don't think that's necessarily the case. Growth is going to slow, but at this stage there's no predictions of us going backwards.
Okay, let's just go back quickly to Mike McCarthy, who's with us from CMC Market Stockbroking, because Michael, this idea of rate cuts, and at times they've been very aggressively priced in, the rate cuts towards the end of the year, that has, in a sense, insulated the stock market from perhaps bigger falls. Now, if that's starting to be priced out, would you expect that to show up in shares in terms of a kind of a disappointment?
It's one of those glass half full, half empty situations, Brooke. We could see low unemployment as good news for corporate Australia. That could support the market. On the other hand, a tighter monetary policy might work against the market. And the way the market reacts to this sort of thing is more an indication of market sentiment than any fundamental effects or changes that we're seeing out of these numbers. Naturally, the inflation data will remain very important. That won't be out until the 26th of this month, and so we won't be looking at a final verdict until then. But at this stage, it does look as if hopes of a fading of a rate cut.
Mike McCarthy, appreciate that. Thank you so much, and we'll let you get back to it. Busy day. Thanks.
Thank you.
From CMC Market Stockbroking. Yeah, let's go back to Simon from Aequalis and Jason from Randstad with me in the studio. What about this idea of rate cuts? Jason, are you finding that is kind of being priced in, if you like, to employers and their outlook when they're looking at hiring decisions? Are they kind of betting on it, riding on this idea, or are they more cautious than that? Or?
Yeah, look, I think the hiring sentiment at the moment, I would say, is cautious optimism, and that's exactly what we're seeing in this patchy sort of rise and fall and this bump along of the employment rate. I think to your point on interest rates, I think for a large part, I think a large number of Australian corporates have already priced in an interest rate cut on Melbourne Cup Day because they were expecting these sort of numbers. So they were expecting worse numbers than this. So I think, look, today's numbers changes things slightly, I think. So it'll be interesting to see what comes out off the back of this.
And Simon, you spoke you guys have spoken of the patchiness, and we've talked about this for some time, as you noted there, Jason. This week we've had reports of jobs cutting within CBA. That's kind of been reported in the media. ANZ's been talking of a pay freeze for top executives. So that financial space is obviously struggling quite a bit. Are you seeing that experience then in just those particular sectors, or can you kind of make broad judgments about something more across the board? What are you seeing?
I think there's been a long history, well, not long history, but there's been a trend towards cost minimisation. So revenues are harder to come by. Organisations have been looking to minimise the costs that they have underneath that revenue line. What's happening now is that cost minimisation is only going so far, and organisations are going to find themselves at the point where they have to actually cut costs, where the costs are going to be cut in the headcounts that those organisations have. But it takes nothing away from the fact that Australia still has, around the globe, one of the lowest unemployment rates. You have Spain, for example, 21% of people are unemployed. The US, 9%. The UK, 8%. So in the bigger scheme of things, I think from a global perspective, we're doing very well. And regionally, it's the same story. Hong Kong, very low unemployment. China's 4.1%. So I think sometimes we compare ourselves to areas of the globe that aren't actually necessarily comparable.
Let's bring in Peter Gleeson, who's with us from Chandler McLeod, and he's in our Melbourne studio. Peter, usually in this studio, but great that you could join us externally as well today. We should get initial impressions from you. I know we always sit here and say this is so hard to pick, and today was just another one of those days, right?
Yeah, absolutely, another one of those days. But I think actually there is a real increase there because both part-time and full-time roles have increased, which is encouraging. But I think let's just got too carried away with it because we are coming into what is traditionally one of the higher employment times of the year. This next quarter is when it all revs up, and we're finding that anything to do with the consumer dollar is still very soft. And I would actually say that both banking and some of the staples industries, what we call staples, the live everyday type industries in the retail, etc., and hospitality, are still very slow. In the mining markets, it remains. You know, we're below 4% now. I'm not sure what today's number says, but a lot of people are still migrating across to Western Australia, and you know, we're coming off the back of a few months of very average employment activity. So I think there's still a fair bit of nervousness around, frankly. I think we've got to be careful about what it says.
Okay, so for now though, where are you seeing the best job creation that would be reflected in numbers like that we saw today, in addition of 20,000 jobs to the economy?
Yeah, well, I haven't seen the actual numbers yet, but I'd be surprised if it's not in the ones that we've been seeing for quite some time. Infrastructure around the mining industry, you know, it only affects something like 20, maybe 25% of the overall employment marketplace. We're still seeing a lot of apprehension around permanent hiring, and basically a number of companies are realigning their business models, I think, with an expectation that things are going to continue to be reasonably tough moving into the new calendar year.
Can bring it back to you guys in the studio. Anything else you want to add to that, Jason? You're kind of nodding.
Yeah, look, I would agree with Peter's sentiment there. I think, you know, the engine rooms of our job creation in this country, being retail, hospitality, the manufacturing sector, and the export sector, are under pressure. As Peter said, we are seeing a slow job growth out of those sectors. Back to your point earlier on banking and financial services, there's a lot of ingredients in the mix in there. I think, you know, slowing lending rates being one of them, but, you know, also Simon's point about an ongoing culture of cost reduction, and then sort of large pieces of their work being offshored. So we have certainly seen a stagnation of new job creation in banking financial services. And I don't think we've seen the large-scale job losses that have been reported yet. You know, the big four banks.
Yet.
Yeah.
Do you think that's coming?
Yeah, I mean, I think if you sort of look at what's coming down the barrel at them, I'd say, you know, there will be some caution coming back into hiring within the banks.
Simon, something else has been very significant this week, of course, and we're talking about it, is the carbon tax. The government's hope, I guess, is that we have this clean energy future. Well, it's gone through the House of Representatives. Do you see job creation in that area yet? Is that something that's starting to kind of pop up on your radar?
I think it's been a steady growth in that. I don't think necessarily that's been driven solely by the carbon tax. Green energy companies have been spawning, which means they need people. They need people across a variety of duties and skills as well. Building wind farms, then accountants counting the money from the wind farms. You know, those infrastructure jobs have been, I think, propped up by some of these projects that the carbon tax, you know, is promoting.
Yeah, I think the carbon tax is an interesting one. I was at a seminar last night. It's interesting if you look across the corporate Australia, and certainly the banking, financial services, even the legal and consulting firms. They've already been working on it. They've already made those hires, those key people in those positions, and, you know, they've been preparing for it for some time. So, you know, the legislation being passed has not come as a surprise, and that they're ready for it. So those jobs, carbon tax specifically, those jobs have been created. I think the whole greening of the economy piece, you know, there's a lot more yet to see there with new job creation.
Let's also bring in Spiros Papadopoulos, who joins us from the NAB in Melbourne. Spiros, with a strong number like that, can we say that rate cuts are off the cards before the end of the year? Does that add to that argument?
Well, it certainly adds to the argument. Obviously we've got a long time to go before the end of the year, and there's some crucial CPI figures coming up. And we have to see the Reserve Bank's revised inflation forecast. But obviously when you get a figure that says plus 20,000 jobs, it does suggest that the Reserve Bank has obviously got time on its side. And when you look at the past week or so, we've had some pretty good economic figures coming through. Retail sales increasing for the second consecutive month. Business and consumer confidence improved. Although they are still at weak levels, they have improved. And of course we had the housing finance figures being positive yesterday as well. So it looks as though the data is stabilising. And when you look at the employment level, although we have seen an increase in 20,000 jobs, as the guests in the studio have been saying, the last little while has been quite soft, and the level of employment is only where it was back in March of this year. So we've pretty much had 6 months of no net jobs growth in Australia, obviously indicating the fairly soft conditions in the economy that we've seen over the past 5 or 6 months. But it's obviously a positive that we are starting to see some jobs growth coming through once again, and obviously the unemployment rate starting to move down is also a positive that we can take away, that will just take the pressure off the RBA to do anything in November.
Spiros, thank you so much. You've waited there for a bit, so I appreciate that. Thanks. Spiros Papadopoulos from the NAB in Melbourne. And just to get across some of the other economists' views around, in Canberra, the independent economist Stephen Kukula is saying, given that jobs number and other developments the past 2 weeks, the odds are tilting, he says, to a 25 basis point cut on Melbourne Cup Day. But he says a very low CPI could tilt it back to 50% in his mind. And Adam Carr, economist at ICAP, saying the Australian unemployment rate is low, domestic demand robust. There is no case to be made for lower rates. So that's Adam Carr from ICAP. Just to have some brief and final thoughts from Simon Boulton with me from Aequalis and Jason Cartwright from Randstad. Simon, one further issue that I've seen a lot of discussion on this week is the, and something I feel quite passionate about as well, the underrepresentation of women on boards and in executive ranks here in Australia. Are you seeing any improvement? We've kind of been celebrating this week with a special summit that's been held in Sydney, the Global Banking Alliance for Women. Are we seeing any progress? Are you seeing businesses interested in making a business case to get more women in higher ranks?
I think definitely. Diversity hiring has been something that's been on the agenda for some time. I think organisations are taking positive action to increase the number of women that they have in their organisation at board level and all the other levels within the business. So yeah, I think that organisations are tuned into this. I think they're actively promoting people or promoting women into senior roles in companies. So yeah, I think it's there, it's being managed, it's I think going the right way.
Okay, and Peter Gleeson is still with us in Melbourne. So Peter, maybe a final comment from you on that issue, one that we don't normally